Red day in the market. The NASDAQ really trailed off after 3 o'clock today, finished down over 1%. But the funny part is the Dow was down 0.86. Then S&P was down. A lot of green here. But what was driving all of it? Look at the biggest companies. Google, Microsoft, NVIDIA, Apple, all these ones, they're down big. Look at Salesforce.com, down 19.74%. Look at Intuit, down 6%. There were some big losers today. HPQ, up 17%. Best Buy, up 13.4%. But when the large companies grow a lot, like they did last year and early part of this year, it's going to drive the markets up. It's going to drive the indexes up, even though other companies are losing. Same thing's going to happen on the downside. You could have a sea of green over here, but the red happens on the big companies, it's going to drive down these values. Why? Because the S&P and the NASDAQ are market cap weighted indexes, not the Dow. That's why the Dow is my bastard stepchild. I never talk about it because I just don't like the way they handle their index. But the S&P and NASDAQ are market cap weighted, which means the bigger the company, the more weighting on that index that it has. So now let's go check out how Salesforce, Dell, Ulta Beauty, and Costco did in their earnings results today and after hours. Big day today in the markets. Salesforce was down almost 20% at one point today, finished down like 17 or 18%. It actually beat on EPS, 244 versus 233 per share, but it slightly missed on revenue, 9.13 billion versus 9.15. But guess what, guys? People are saying the growth story isn't happening more. Great lesson to be learned here. We're going to go through 3 other companies apart from Salesforce today. We're going to do Dell, Ulta, and Costco. With Salesforce, though, this is a darling growth company. Guys, growth eventually slows for everyone. This is what we talk about. You cannot assume growth levels forever. This is a very, very basic thing to understand, but it's super important in order to be a successful investor. You cannot assume that the world is going to keep growing like crazy and there won't be any hiccups along the way. Salesforce is just a little bit different on its outlook. Boom, gets killed. Dell, double beat. $1.27 in earnings versus $1.26 expected. 22.2 billion in revenue versus 21.7. And look at this thing, down 13.5% after hours. And this is the company that the CEO of NVIDIA said that that's the company to go to for your computing needs. I love Dell computers. We love them in our office. However, just to let you know, they beat double and they still are down 13.5% after hours. Why? Outlook. This is what a lot of people are looking at now. What's the outlook show? Double beat, stock falls. Double miss, sometimes the stock is up. If you remember, Tesla recently had a double miss and they were up. It's crazy. So if you're new to the channel and you like receiving 4 or 5 videos per week, updating you on what's happening in the market as it happens, do me a favor, subscribe to this channel. It'll be very exciting and entertaining for you. Now, Ulta and Costco. Ulta, let's pull up and see how they're doing because it'll tell us nothing about how they reported. They're about even, up 0.7%. They were up 1.8 before. They had they had a single beat. They beat on EPS, 6.47 per share versus expected of 6.19. And they were right in line on revenue, 2.77 billion. Guys, I own Ulta. Do not buy a stock just because somebody on the internet has it. Ulta reported 1.8% comparable sales growth. I like the way Ulta manages their cash. They buy back shares. They're sitting there and they're doing smart growth as a company. And this is a business that's partnering with Target. They're putting Ulta Beauties in Targets. They have very good sales per square foot. This is a company I like. It is retail. And retail is going to have its issues going forward. There'll be a few players who do well. A lot of other retail, Best Buy just reported today, same-store sales were down. However, 10 quarters in a row of declining same-store sales, growth sales. However, it was better than expected. Now, Home Depot, Target, Lowe's all reported big drops in same-store sales. Why? Is it an indication of the consumer? I don't know. That's a good question. I don't want you trying to guess what's going to happen in the market. So what I want you to do is find good companies at good prices. A company like Salesforce being down so much, were people banking in too much growth for this company because it's a tech company? Probably. That's the problem. The second you miss a little bit or provide a little bit more conservative outlook, even if it's because of the economy, what happens then? Remember, this entire S&P is up because of a couple companies again this year. We're seeing a lot of declines in stocks. Even look at Ulta year to date, down 21% year to date. 21. 21% year to date. This company was 574 just 2 months ago, a little over 2 months ago. And now it's at 385. It's now down after hours. In this short period of time, we've discussed this. Now, guys, here's Ulta Beauty's report. Net sales of $2.7 billion compared to $2.6 billion a year ago. Comparable sales increased 1.6%. Net income of $313 million. Now, obviously, as you scroll down a little bit, you're going to get a lot of comparisons here. Last year's comparable store sales were up 9.3%, which is a big, huge number. Gross profit down slightly from 40% of the nose to 39.2%. However, SG&A expense up. Don't like that very much. Operating income down. EPS down. New stores, 10 new stores versus 4 last year. That's interesting. Okay, so they're still opening stores. They're still looking probably at growth markets saying, hey, where are people moving to? We need to appeal to higher end women. Great. More power to Ulta. I just hope they continue to open stores in strategic locations and close poorly performing stores. And as the stock continues to fall, hopefully guys like myself can continue buying and Ulta can continue buying. Now, for those of you who are new to this channel, it might be counterintuitive to you to think, why does this guy want the stock to fall? I absolutely want every stock I own to fall. I want to buy more shares at a lower price. That should be the ultimate goal of every investor. When stocks and companies go on sale, you buy more of them because your thesis should be a 5, 10, 20-year long thesis. And it's not going to be affected by the short-term gyrations in the market. These small aberrations here should not affect you. What it should be is, where are you seeing a breakdown in your fundamental thesis? My thesis, whenever I buy a company, is threefold. One, do I think this company will be around for the foreseeable future? I do think Ulta will be around for the foreseeable future. Now, they might be bought out by somebody, but I think they can stand on their own for a long time. Two, do I think their revenue and profit will be higher 10, 20 years from now than it is today? I do think so with Ulta. And three, can I pay a reasonable price for the company today that factors in all these things, factors in my desires, my wants on return, and get an adequate return on the money invested? If the answer to all three of those is yes, I need to take a further look and make sure my thesis is about on par. So again, comparable sales, I've always tell you people, it's for stores open at least 14 months and e-commerce sales. Be interesting to see what that is. A 1.3% increase in transactions and only a 0.3% increase in average ticket price. Oh, gross profit increased 1.4% to $1.07 billion. Interesting, because I did not see that there. Even though gross profit decreased to 39.2%. Now they go to explain. SG&A expenses increased 24.4% to 24.4% compared to 23.2% of revenue, primarily due to corporate overhead for strategic investments, lame word, higher store payroll and benefits, higher store expenses. So guys, they break this thing down, talk about their tax rate being up, mainly due to reduced benefit from income tax accounting, yada, yada, yada. So nothing I'm reading here that I've heard so far, seen so far, makes me think to myself that the reason I bought Ulta to begin with is different. The question is it still at the right price for me? So that's why we go to Stock Analyzer tool and we check it out. So let's see what I did on the Stock Analyzer tool recently. And again, guys, don't buy a company just because somebody on the internet has it. You need to find companies that fit what you understand and fit your portfolio and time frame. I'm trying to teach a process here. And more importantly, I'm trying to teach how you handle your emotions, because everybody has the brain to buy a company, to buy stocks. Who has the stomach to do it? That's the question Peter Lynch has asked, and that's the question I'm asking, and that's what I'm trying to teach here. That if a stock falls in half, as long as my thesis is the same, because remember, you might sit there and say, well, for the stock to fall in half, the thesis has to change. No, just the sentiment has to change. Because as the stock price starts to fall, people will get the news that justifies that stock price falling. And it's up to you to decide if that news is really legitimate or just part of a ongoing news follows the stock price. And that's what I'm trying to teach here. That's what the people in our community are trying to extrapolate on. So if you want to have that mentality, if you want to be able to handle your emotions better and probably therefore get a higher return on your money, or at least sleep better at night, click the link below, join the community, join our inner circle. I guarantee you'll come out a better investor and a clearer investor from it. So before we get to Costco, 3%, 5%, and 7% revenue growth on Ulta. And look at this, guys, increasing return on invested capital. As time goes on, they do a better job of getting a return on the money invested in the business. That's a sign of a good company. Profit margin, 9.5, 10.25, 11. Same with free cash flow. PE, they're good allocators of capital. Apart from Sephora, which is owned by, I think, Louis Vuitton, they're a great makeup business. Everybody, every female I know knows about them, goes to them, etc. I put 15, 18, and 21. And I only put a 9% desired return because it's up to you to decide what's your margin of safety. So I hit the analyze button. Boom. I have a low price of $335, high price of $650, middle price of $470. Ulta fell last week. I was able to pick up shares around $370. I think that's ample to start a position. I don't have a full position. Is this appropriate still? I don't know. We'll see. But either way, if you bought at today's price and all my assumptions occur, that middle return, 11.7%, is about what you expect here. Now, for Costco. Now, let's go check out Costco. Let's see what Munger's favorite company in the world is doing. They are down 2% after hours, exactly $800 a share. Why? They reported $378 earnings per share versus $371 expected. Check mark there, they beat. But revenue came in a little bit lower, $57.4 billion versus $58 billion in revenue expected. Now they're below $800 a share. Who cares? Guys, I don't care about these quarter-to-quarter results. I like just making sure I get a 500-foot view of, are things still progressing along? No company can beat on revenue and profit every single quarter. Is Costco a good company? Yes. Are they a great business? Yes. Do they have great management? Yes. Are they keeping that $1.50 hot dog the same? Yes. So all you have to worry about is, can you pay a reasonable price today to put up, and can your stomach handle those fluctuations up and down? Because they will happen in every company. No company is a darling forever. NVIDIA is the darling this year. It was Tesla for years. It was Microsoft and Intel in the early, and Cisco in the early 2000s, late 90s. It doesn't happen forever. NVIDIA will be hated at some point in the future. Tesla will be hated at some point in the future. Apple will be hated at some point in the future. This always happens. No company has ever been great forever. What you have to decide is, can you pay a reasonable price that as the fundamentals get better, as they keep growing, are you getting a good return on your money? That's the question. So let's see what year-to-date Costco's up 25%. 1 year up 60%. Jesus Christ. So since Chuck Munger died, they're up like over 25%. That's incredible. And he loves this company. He said he'd never sell it. Now, granted, he was 99 when he said that, and he died a few months later. But guys, Costco's a great company. If they're able to execute, they're able to execute. $57.4 billion versus $58. All right. That was expectations. Let's go pull up their press release. So even though they missed, net sales for the quarter increased 9.1%. You think miss, and you immediately think, oh my God, their revenue went down. It did not. It went up 9.1%. Net sales for the first 36 weeks increased 7% to $171 billion. But net sales were positively impacted by approximately 0.5 to 1% because of a shift of the fiscal calendar year as a result of the 53rd week last year, which is still growth there. Now, here are the comparable sales for the third quarter. U.S., 6.2% last 12 weeks, 4.1% 36 weeks. Canada, 7.7%, other international, 7.7%, total company, 6.6%, e-commerce, 20.7%. Jesus Christ, guys. Does that sound like a company that did bad? No, they just missed on expectation. They still grew 9%. Come on, give me a break. It's incredible to me. Net income, third quarter last year was $1.3 billion. This year, $1.68. That's a 20% increase. That's more than a 20% increase. Come on, what are we doing here? So guys, if you like what you hear, subscribe to the channel, check out our community. I guarantee you'll get better as an investor by doing it. Take care.